Joining us now to discuss the year of IPOs and his outlook for 2026 is Nasdaq President Nelson Griggs. Good morning to you. Congratulations on what was a pretty great 2025.
Yeah.
When you think about 2026, people are already speculating about names like OpenAI and Anthropic and SpaceX. I mean, we could be in a whole new realm. So where are we really? And is that pie in the sky or is that reality?
I think there's a lot of reality there. I think this year we went in probably with higher expectations, but dealt with the tariff situation. We dealt with the government shutdown, and we still had a doubling of last year. So there's a bit of a backlog in the pipeline. It's the most diverse pipeline I've seen in years across multiple sectors. We have a low VIX. We have a volatility index. We have an interest rate environment that's more constructive. You have the markets doing pretty well. And I think there's just a backdrop of good M&A activity, putting a floor on some prices. And we've seen in the private market valuations getting a lot closer to where previous rounds were. So the setup is very strong. Obviously, things can happen, but across a large, small, medium, we see a lot of activity coming in 26.
Those names.
Yeah.
I don't know if you can speak to those names. I don't know how this works.
I think we've done this before, and I cannot speak to those names. But no, I think there's tremendous excitement about what could be some of the largest IPOs of all time. Probably more of a back half consideration. But I think you look at companies that are in that 1 billion, 10 billion, there's going to be potentially a bit of a rush to get out in the first half of the year if you do think about some larger names, maybe thinking about the back half of the year to make sure they're not going to be, there's enough capital.
Policy question.
Yeah.
Which is, and I think you had a session here with the head of the SEC and Adina together in terms of trying to make IPOs great again. Right. There's still this issue of so many private companies that have stayed private for so much longer. And it's true that some of the companies we're even talking about, that you're not mentioning by name, but I am, have been private for quite some time. And whether it would have been better to make those companies public earlier so that the investor class, the public, could actually participate. And what you think is really happening at this point.
Well, we definitely have, with the leadership of the administration and Chair Atkins, there's a strong push. The strongest, I've been here for 25 years, and we've always tried to think about ways that we can make the public markets more attractive to companies. And I think there's more momentum now than ever, looking at some big structural changes, scale disclosure, the consideration around mandatory arbitration as an opportunity for companies, and then proxy reform. So I think it's building, Andrew.
It seems like at the same time, there's an effort afoot to allow, for example, like the tokenization of a private company so that public shareholders can effectively access private companies without the same types of disclosure, frankly. Or, for example, these semi-liquid instruments of creating effectively what looks like a venture capital fund or private equity fund, putting those right here in the public markets, so that people so that those companies actually stay private for longer.
Yeah, there's a lot in that question, but we're believers that we need to have a robust private market and a robust public market, and anything that we can do at Nasdaq to help make the public markets more attractive, we're all in on. We have been for years, but I think we have an administration and SEC who's willing to really take that leap now and make some things effective. But with the private market, that is a very viable asset class, and you need to make sure that has the right guardrails on as well, too. So I think the blend is a good thing.
You mentioned that maybe some smaller and mid-sized companies will want to get their deals out because maybe we got the jumbo ones coming later. In aggregate, are we going to be worrying about how much capital is going to be demanded of this market at a time when we're actually talking about stock buyback flows maybe going down because everyone's spending on CapEx?
I think it's a good question. I think the market's going to determine what that looks like. There's, if you look at this year being a good year on Nasdaq, raising almost $47 billion, that still is not a very large amount, right? So let's say you get a doubling of that, what have you.
The S&P is like $55 trillion or something.
Exactly. So I think there is plenty of capital. You do start looking at some of what could be the largest IPOs of all time. That's going to be something for the bankers, the whole ecosystem to work out. Yeah.